The stock of cigarette to hotels conglomerate ITC has gained around 19% thus far in March, far outperforming its peers like Hindustan Unilever, which has lost 10% during this period. Peers such as Godrej Consumer Products, Britannia, Nestle India, Dabur India and Marico too have lost 7% to 11% in March. While the Nifty FMCG index has mostly been flat, the Nifty 50 lost over 2% month till date. The fall in most FMCG stocks, analysts said, is on account of rising raw material prices that gained ground on the back of Russia-Ukraine war. Over the last quarter, prices of commodities like palm oil, crude oil and skimmed milk powder are up 23 to 42%. Crude-linked derivatives, currently witnessing single-digits inflation, are likely to catch up with a lag of 2 to 3 months. So what's happening with ITC then? Analysts say the company is relatively insulated as it has other verticals such as hotels and cigarettes which cushion the blow to its FMCG segment from the sharp rise in input costs. What's also working for ITC is the fact that the government has kept the excise duty on tobacco unchanged in the union budget for fiscal 2022-23 and the cigarette volumes are steadily climbing. That apart, lifting of most COVID restrictions post the third wave has led to an increase in mobility, which augurs well for the ITC's hotel business. ITC's paper business segment too is likely to do well in the backdrop of tight paper supplies in the domestic market and a possible surge in paper exports. Analysts such as Vinay Khattar, head of research at Edelweiss Wealth Research, believe all ingredients are in place for the stock to now catch up with the markets. The positives, he said, will lead to an earnings CAGR of 12% in FY 22-24 against a mere 7% in the last 5 years. Cigarette volume should revive at a CAGR of 5% during FY 22 and FY 24 as against a CAGR of -1% between FY 11 and FY 21. FMCG's EBITDA margins likely to scale up to higher single digits while the hotel, paperboard and agri-commodities businesses are set to revive, said Vinay Khattar, head of research at Edelweiss Wealth Research in a recent report. Technical analysts too see the stock higher in next 3 months provided the overall market sentiment does not take a knock due to ongoing political situation. Let's go to business standards of Avadhut Bakkar to understand how the stock looks on the technical parameters.
Shares of ITC are few bucks away from hitting new 52 weeks high. The present high stands at 259.20 level. Whenever ITC manages to cross this mark and enter a new territory, one could definitely see an upside towards the next hurdle of 280 levels, a possible jump of 7 to 8%. On a wider perspective, ITC stock has a formation of a golden cross, a crossover of 50 days moving average and 200 DMA, which investors and trading experts consider as a bullish signals. So based on the formation, one could definitely see on a breakout above 257, which is the breakout mark for the golden cross, one could definitely see a spike towards a new historic high. The present high stands at 315 levels. So overall picture for the ITC at this current levels looks very promising, and a breakout could definitely trigger the next upside.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.